Hello traders, and welcome to a new video on order depth trading in a specific manner. I've talked about order depth a lot. I've talked about MDR a lot, but one thing that I haven't talked about is applying MDR to a very specific set of coins. Usually when I talk about MDR, market depth ratio or order depth, I'm talking about Bitcoin or Ethereum, or I'm just talking about a general basket of altcoins, pick them all. But what I want to talk about today is looking at cheaply priced Bitcoin coins. That was worded terribly, but basically low-priced coins to Bitcoin with not many Satoshis. Now, before we get into this and I explain why this is important, a little bit different than what I've talked about before, special announcement. I am currently in the works of creating my third guide. My first guide was on Fibonacci trading, and my second guide was on price action volume trading, and this third guide is a trifecta of order book reading, order depth reading, and order flow reading. I've spent the last half year working on this. I haven't told anyone about it yet, but I'm proud to announce that that's going to come out. It's also going to come out with a few videos and also access to my trading group. So really looking forward to releasing that. And what I'm going to be showing today is a little bit of a strategy that's similar to what will be in that guide. And in my guide, I'm going to have many more strategies, many scenarios, and many practice examples as well. Now let's go back to this example. And I will say, this is probably going to be a long video, but if you stick to the end of this video, you're going to have a quantitative trading system. And I'm doing this for free. This is not a paid video in any way. Besides me mentioning my guide, it's not really anything more than that. This may be a long video, but what we're going to go through, just to do a quick overview, is we're going to be screening for coins, so looking for a specific set of coins. We're going to be looking for their past order depth patterns, and then we're going to be assigning thresholds, and we're going to get alerted on those thresholds using a tool that will email us, that will give us an alert when any of these thresholds are met, so we can quickly get alerted and then execute a buy order. Let's begin. Why do we care about these cheaply priced coins? And more importantly, why are they so different than these coins? Why don't we look at the order depth of all these guys? Why just these? When a coin is cheaply priced like this, what you're typically going to see is it's going to be bouncing between a bid and an offer. Best bid at 21, best offer at 22, and it's just going to keep bouncing between a bid and an offer. Now, this kind of price movement is very, very different than a coin like, FBTC or BNB BTC. If I look at BNB BTC, this is not going to be bouncing between a bid and an offer. It's kind of, it's a little bit more all over the place. It's not static. But these static coins like MPXS or even Key BTC or SCBTC are going to be more or less just bouncing between a bid and an offer. Bid here, offer here, bid here, offer, bid, offer, now bid, offer, and so on. Let's go back to HOT. Now, what happens when a coin bounces between a bid and an offer is it's going to remain pretty static, which means that the order depth for that is going to be more revealing than the order depth for a coin that's kind of moving all over the place. Now, why? Well, if a coin's not moving, and if its coin's just staying between two prices, then we can actually read the order depth as an influx of supply or demand. So really demand coming in, meaning more bids being added, more supply being added, more offers being added. Now, why can't we do that for something like BNB BTC? Here's the issue with order depth in a trend. When price goes up, price is going to discover, meaning basically the range that you put your order depth on in a trend, let's say it's at 1%, it may move within 1% range of a very large offer, and then that's going to alert you to a very negative, MDR. And that's going to make it a little bit tougher to trade that trend because you may then want to exit when in reality price, just keeps going up until it reaches that large offer. But with these kinds of coins, that's not what happens. They basically just stay flat. And if we have any bids being added, we're going to see it on the MDR. And if we have any offers being added, we're going to see it on the MDR. Now, you may wonder, well, this is all great. This is a very static pair. But if we look at something like HOTF, it's not. Or HOT and BNB, this is not as static. It's not just bouncing between a bid and offer. It has more price discovery. Well, the thing is, HOTF, HOT USDT, HOT BNB are going to be more or less following the HOT BTC rate. And if you want to know more about what that means, you can look at my triangular arbitrage video where I show how HOTF and HOT BTC are interlinked. because of arbitrage. Now, let's go back to HOT/BTC, and now I want to look at the order depth patterns of HOT/BTC. So there is an order depth strategy known as thresholds. So what that does is I'm looking for a positive or a negative threshold in the MDR to be met. Now here, I want you guys to pause the video. I mean, don't pause it yet because I haven't asked the question. Pause the video after I say this and tell me, what do you think is a good threshold for the positive MDR? Now what that means is if the MDR goes beyond, I kind of just gave the answer away. If the MDR goes beyond a certain number, that would be interpreted as very bullish. What do we think that number is based on this past data? I'm going to give the answer. I would say it's about here. I think that this value here is just about a very good threshold, meaning that if this number is reached or broken, so it's about 23%. Yeah, about 23%. If 23% is broken on the MDR, that's very bullish. That's very, very bullish. Let's go take a look at what happened when 23% was in fact broken. Now, it was broken here, right? Now, what time was it broken? About 6:30, 7. So around 6:30 to 7, but 7 officially. But if this data is updated every 5 minutes, when you're on the 1 day anyway. So it's between 6:30 and 7. Let's go look at 6:30 to 7 on 5/17, May 17th. So that's not this because it's 6:30 p.m., which would be 18:30 to 19 o'clock military time. It's around here. So this is where it was indicating that it's a very strong buy because it reached a threshold. Now, because of that, if we had bought there, our maximum profit potential would have been about 9%. That would have been really nice. And it would have been within, what, like 10 hours? I mean, I just spitballed 10 hours. Yeah, exactly 10 hours. Okay. Yeah, so 10 hours, very good potential profit. And your exit would be, determined up to you, of course. But you could always use, the order depth falling to negative as a time to exit. So this is just one way that we can use the MDR threshold. But let's go take a look at another pair. But actually, before we do that, I want to do the final component that I did promise, at the start of this video. We can actually screen for thresholds to be hit, so we don't have to stay at our computer all day. To do that, let's first just find a threshold. What do we think is good here? Do we think that we want to use this as a threshold? There's no answer to this, because it's all a bit subjective. Or do we want to use this as a threshold? Let's say that I only want to be alerted if this is hit. Okay, how do I do that? Well, you're going to need the Google Chrome extension known as distill.io. And I think I'm gonna link that in the description below. But here's what we can do. We know that 29% is the previous threshold for the MDR. What do we do with that? Well, I'm gonna go to my distill.io. I'm gonna select parts of the page, and I'm gonna click the MDR value here because this is where the MDR value is reported. I'm gonna click Save Selections. Now, this part's not that difficult. This is just how you want to be alerted, how often you want it to check. So I want it to check every, let's say 4 minutes. And then this is the only thing that you need to do. You just need to do that. Text has number more than. Now what this is showing us is we will be alerted whenever the MDR value grows beyond a certain number. Here it'd be 29 because that's our threshold. I'm gonna hit save and I'm done. And this is a free tool as well, unless you want to get the premium for this tool. Now, a number will pop up here, and if it's beyond 29%, it will alert me. But currently it's, negative 5.28, so I'm not alerted, but I still do know the value. Great, so we have our threshold set up for our first static coin, which is HOT. Now, we don't want to just do this for one coin, we can do this for multiple coins. So let's go take a look at, let's look at Storm BTC. So here's the process that we're going to go through. Looks pretty bullish, looks like the offer's about to fall. Let's go look at Storm F, because I want to pull that up. Next to the Storm order flow. Now let's go look for some patterns of potential thresholds for Storm, and then we can get alerted to those potential thresholds. Okay, so this one's very clean, I think. I think that a very good threshold, I mean, in my opinion here, would just be 0%. So meaning if the MDR goes beyond 0%, I would be inclined to be more bullish than normal. And if we look at the last time that happened, it was 4 p.m. on 5/17. So 4 p.m., 517 looks like 4 p.m. is 16 o'clock military time. Here, uptrend began. We got a lot of bids coming in, and look at that. Price went up about 7.36% in like an hour because we had so much bidding strength that came in here. Now, how would we have known to actually have bought that? Well, we would have known because we would have set up a threshold. The threshold would have been hit, which would have alerted us, which would have made us want to buy this. Now, we selected this coin, because I do want to reiterate this. We selected this coin because of it's just bouncing between a bid and an offer. So the supply and demand coming in are going to be more revealing of the actual order depth and less of just price moving into a certain range that gives the order depth. Now, one more thing is that notice that I'm not using any selection. I'm just using the general because I want to get as much order depth information as possible of the entire order book. Because with this kind of strategy, we're not looking for local supply and demand, 5%, 2.5. We're looking for the entire order book and looking for an influx of supply or an influx of demand, looking for more demand coming in for us to buy. So this strategy is a bit different than most order depth strategies, but I think that this does backtest quite well, and it's something that you can do. All right, let's set the threshold for this. I'm just only going to do this one more time because I think by now you guys probably know what to do. I select this, I click Save Selections, I click Add Condition, any text has number greater than 0. If the number is greater than 0, I want you to tell me. And here it is. And it will check, and it's going to first report us the MDR value, which is negative 25.5. So not really feeling like I want to buy Storm right now. That seems like not the bestest idea, not the best idea. Yeah, I wonder what happened here. At 5:15, we actually got a little bit of positive at 11 p.m. So 5:15 at 11 p.m., what happened? So 11 p.m., yeah, that would have been around here. That's a little bit messier. I mean, what, price went up like a few percent? Yeah, you could have potentially profited on that, but that one may have been a little bit tougher. Now we can look at a third coin, and I may want to end the video just on a third coin because I think I've revealed this strategy and really how it works for the most part here. Let's take a look at Encash. It's bouncing between 25 and 26. I'm going to go to Encash F on Binance because I want to see how this coin is moving. Okay, and let's go look at Encash. All right, so pretty clear pattern here. It looks like we got a very positive MDR. Wow. I'm going to hit the 1 day just to see at exactly what time this became very bullish. Looks like it was 9:40 a.m. Let's look at 9:40 a.m. today and see exactly what happened. 9:40 a.m. was about here. Yeah, so around here, this was where we had a complete change in the MDR, where we actually had an influx of demand coming in from a very static coin. When we had that influx of demand coming in, price rose. You can see about 5.9%, and it may continue to rise. Okay, and if I was to set a threshold, I mean, this would have been a great time to buy, but we can't do that now. If I was to set a threshold for this, I think I may want to do 35. I could do 0 is probably going to be hit soon anyway. So I think that if the MDR goes beyond 35% again, then I am interested in being alerted. So I'm not going to do it again. All you'd have to do is just go to distill.io. You click the value here, and then you can just save selection and say, hey, MDR goes beyond blah, 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 where in this case it would be 35%. Then I want to be alerted. So this video actually went faster than I thought it would. I was expecting like a 25 to 30 minute video on this, but I guess that didn't happen. I mean, fingers crossed now. This may turn into a 30-minute video, but we'll see. Let's look at SCBTC, and let's go look at if we see any patterns there. Siacoin. Okay, so it looks like we've had a consistent period of negative MDR. This one's a little bit trickier because one threshold we could use is using this as a threshold if this gets hit again. Another one you could even use is something like these, or even a 0, as you can see. Yeah, interesting. But this kind of setup, I'm not really the most interested because it's kind of a strange order depth pattern that I'm seeing, so I don't really want to set alerts on that. Looks a bit off, or not off, just not interesting for me. So I'm gonna look at key F. And let's go see for key if we have any good order depth patterns. And it looks like, yeah, we do. 1 week, we can see that at 4:30 a.m. on 5/17, it looked like this finally went bullish. You know, it went from a very negative MDR to very bullish at 4:30 on 5/17. 4:30 on 5/17 is already looking, yeah, because this is 5/17. 4:30 was about here. So if we had bought about there, you can see the price does fall a bit. I will be honest. Price is kind of all over the place, but it does end up rising up to here. So potentially you could have gotten a profit out of this. I mean, this could have been a profit or a loss because I think it goes up as much as it went down. Hey, it did go up though, as you can see. Now, if we want to set a threshold, I think that something even like for this, 0 might be a good threshold. And if the MDR goes beyond 0, you may want to be alerted to that, as you can see here. Okay, now I want to wrap this up with more theory in why we care about this. I think I've said this a few times, but not all coins are traded equal. I was going to say treated equal, but I think I just coined a new term. Not all coins are traded equal. Okay, that's the highlight of my day. That's the highlight of my life. Okay. That was a good pun. All right. I'm not going to talk to myself for the rest of this video because I think you guys would want to, would not like that. Where was I? So talking about, the static pairs. So these static pairs, they're quite different than other coins, and they offer us possibilities of really locating an influx or really demand coming in and supply coming in or supply coming out, you know, offers being pulled, or demand coming out, bids being pulled. Now, basically, we want to jump on any opportunity where offers are being pulled, making it, you know, easier for price to go up, or when bids are being added, more demand, meaning likely more market buying on the offers. Any of these opportunities, I mean, offers being removed and bids being added is going to make the MDR go higher. That's just how the MDR works. It's a market depth ratio between the bids and the offers on a crypto. Now, with these coins, I think that you do have to be careful about liquidity because when we're looking at HOT, you may think that you want to buy HOT BTC, and if you do not want to make the mistake, and this is important, of buying it like 22. Do not do that. Market buying on the offer, because this looks bullish, is a terrible idea. So you may say, well, what do I do instead? Well, actually, this actually gets into parity and arbitrage, but you'd probably want to buy on one of the altcoins and not one of these static pairs. So if you have Ethereum, you could buy this one, and if you have BNB, you know, you could buy this one. But I repeat, do not, I mean, this is not financial advice. This is just not being a fool advice. Market buying any of these very cheaply priced coins in Satoshis is just going to be buying you at a horrible rate. When you can get a much, much, much better rate by doing something like this, by just buying HOTF, you know, at around here, and then understanding order flow, order depth, believing that the order depth will, you know, work in your favor and price will go up. So that's going to do it for this video. To recap the strategy, we are looking for coins that are cheaply priced so that we can see actual supply and demand coming in and out of a coin. Instead of coins discovering offers because it's in an uptrend or discovering bids because it's in a downtrend. So this is going to be looking at MDR in a bit of a different way. Now, if you want to go try this out, I would highly recommend do not trade with your full capital. Maybe you could try trading with a small amount of capital or even no capital at all, and just track these over time and see how it would have worked. Because just jumping into a new strategy without any research or practice with lower capital is probably not the best idea. That is not financial advice. That is just, you know, something that I would do, you know, if I were you. With that, guys, that's going to be it for this video. I hope that you found this strategy helpful, and if you didn't, then hey, more liquidity for me to take. So, great. See you guys later, and happy trading.